Yo, what's up guys? It's your boy Looney. Today we're doing something a little different and we're breaking down a stock, and that is Adobe. We're gonna look at fundamentals and look at the bull and the bear cases now that Figma is IPOing and seeing how Adobe is going to do in the future. And we're gonna have a segment on Figma as well as Adobe and just look at the opportunities for this year, 2025. But before we get into it, quick shout out to the Discord. It is free to join, and then I also offer a premium membership, and that is $8 a month, and that gives you access to one-on-one coaching. I have trade callouts, I have an option selling course, and more. You can check it out. All the links to that are in the description. Remember, this is not financial advice. This is just my personal opinion on what I'm doing with these two stocks. So let's first look at Adobe and look at the fundamentals with Adobe. It's currently at 370. Its market's not open, so it's not moving right now, but it is looking like it is gonna have a good earnings with 5.87 billion revenue, and that's 11% year over year growth, and a non-GAAP EPS of $5. And also it has a great gross margin of almost 89%. Additionally, a net profit margin around 30%. And therefore, it's an elite operating margins reflecting industry-leading profitability. So profitability as well is around 60%, and this is one of the top tier of its competitors. And you could use several different websites to look at this, like MSN or even Robinhood itself gives you what their bear case or their bull case, and you could also look at its entire report. Now, this is updated since July 4th, and it's sitting at 560 fair value. So you can see there's obviously some growth. And just the bull case or the bull scenario is that it has dominance in this scope, in the digital media and creative suite. And it has ongoing transaction. That reoccurring subscription model is a very strong tool, and now it's incorporating AI integrations like tools in Photoshop and Acrobat. Now, Adobe has a lot of different software, systems, programs, and I think it's a great company. It is very expensive, $370. That is a lot to pay for one share, but it looks like that it is a fair value for what it actually offers. It's a strong company, and its PE ratio is only 23. So that's not that high or low. That's actually somewhere in the sweet spot. I'm curious to see what its competitors are. So let's look at Salesforce real quick and look at what their price to earnings ratio is. Now, Salesforce is almost double that, and they offer similar, or they're competitors of each other. So it actually looks like it's on the lower end side of things. And in the past 5 years, it's down 14%. So it looks like this stock has a lot of room to grow. But on the other hand, let's look at what the bear case is and see why it's actually seems like it's down in the past 5 years. And that's because some argue its digital experience segment was built on acquisitions and just may force integration risk and just slow growing momentum. And that makes sense, because if it's relying on other companies and acquiring, its foundation isn't strong, and it's because it's built on other companies. But I don't think that will negatively affect the company. It is a big brand, and if one acquisition doesn't perform, I don't think that's going to affect the entire company. That might just be a short-term sort of risk. This is a very long-term stock and company, and I could see this stock being around for years to come. And just as overall cloud growth has slowed. So that is an issue that has been going on, and most of its SaaS transition is complete. So it's raising questions about long-term upside. So it's basically saying that there is room for growth, but the rate of growth is slowing down. And let's look at Figma. Or let's go more into what I'm doing, what I'm exactly doing with Adobe. And I'm staying away from it. And that's not because I think it's a bad stock, but I just think it is a very expensive stock. I can't really do much with it. I can't do much option trading. And the room for growth is there, but I want one that's a little bit more volatile and speculative, so this way I can grow my portfolio. This one seems like a slow growth company, and although there is upside, I think if this stock goes up and the market goes up in general, there's some better opportunities, especially with Figma coming back into the scope. So let's look at Figma, and I've covered this stock. I had my own video on it, but we could just quickly go over it. And this one actually had a acquisition, didn't go through with Adobe. It was about $20 billion that was offered to Figma, and there was just some issue and they didn't go through. So instead of doing Adobe, I'm actually looking at Figma. It's an IPO that is coming soon. It's coming in about a week, and it is showing growth. There's revenue growth, and they're also in the AI space. That's why Adobe was so attracted to this company. And its independence actually lets it double down on innovation and be competitive. And it allows it to go after new markets and just benefit from the AI momentum that even Adobe is involved with. So what is the takeaway? Can you invest in both? Should you do Figma? Should you do Adobe? Now, again, this isn't financial advice, so you could kind of do whatever you'd like, but I'm personally just doing Figma. It's a cheaper stock. It's a younger company. The room for growth is there, but also the room for losses is also there. Adobe sort of built its structure already and has a name for itself. Figma still has that room to either make mistakes or to grow as a company. And that's why I'm a little bit more attracted to Figma, because they're trying to be a lot more competitive. Adobe doesn't really need to be as competitive, but now that Figma is in the field, there is a chance that Adobe might be trying to acquire and just grow its company and dealing with competition. So competition can be a good thing, and that's why I'm only doing Figma. There's no need to do Adobe and Figma for myself, because I feel if Adobe grows, Figma might decline, but I also think it's more likely that it will grow as well, because they're both in the AI space and just strong companies. They're both innovating, and that's why I think Figma for my own self is a little bit better opportunity. I also can get the benefit of options if I decide to sell covered calls or to do a long-term buy call leap option. It's a little bit more affordable with Figma. Adobe is such a big company. And if you are holding Adobe, or if I was to hold Adobe, I wouldn't be looking to sell them. I don't think that it will go low in the long term. But for a new person or a new investor like myself for Adobe, I'm not really interested because of its price and just its overall position. And let me know what you're doing. Let me know if you're doing Adobe, Figma, or both. And leave a like, drop a comment below. And until next time, peace.